We're seeing the markets coming under significant pressure. Some say that this is kind of an obvious thing to happen purely because we've seen the markets gaining so much ground over the last few sessions. Do you think that we are due for a little bit of a sell-off?
Yeah, I don't know. I can't keep a clear head after hearing Oprah's going to finish in 2012.
I know, it's very tragic.
Yeah, it's
try and just keep it together, Sasha.
Yeah, I think we're probably going to be in a state of flux for a little bit. But we've seen this pattern emerge. You know, after a good reporting season from companies in the US in the previous quarters, markets hold some sort of a level before, interestingly, moving on. There have been specific data points that have suggested that maybe, and I think I'm referring specifically to the housing starts one in the middle of the week, where we saw a 10% fall versus markets were expecting somewhere in the region of 1% up. And that was specifically related to a tax credit that
comes to an end, I think, at the end of this month. And they've extended it now. It's been
extended, absolutely. So people are a bit worried that a lot of some of the data feeding through has been stimulus related, and I guess that's no surprise. That's you know, obviously that's what the stimulus was there for, in order to be able to prop up, make incentives. But you know, it all points to perhaps Washington have to make some more, have some more stimulatory influence in markets specifically. But I don't know, I think Christmas has arrived at a good time, and you're seeing some of those retail sales look a little bit better. There's anxiety everywhere, and I guess that's what makes markets, is people on the flip side will say, people maybe who haven't been participating in this equities rally will say things like, oh, you know, look at all these specific data points, and say, oh, it all points to once stimulus is taken out of the system, you know, markets going to return to what they were a year ago. I don't know. I mean, I perhaps take a different view and say, well, there are real signs globally that consumers are starting to pick up. Perhaps not in the local environment.
You mentioned housing starts down 10.6%, and obviously very disappointing number. We had mortgage delinquencies rising 9.64%, and as I said earlier, at this point the number of loans delinquent or in foreclosure are bigger than the number of new and existing homes for sale today. I mean, that's a scary number, and if you think about it, it all started in the property market. So, you know, analysts and investors are looking for a turnaround in this specific sector of the economy.
Look, in the last 2 to 3 months, you have seen signs that it's starting to stabilize. So I think you're right. It's spread from subprime into prime. And it is worrying. But I guess, I think what you have to bear in mind is you're probably going to see rates lower for longer. So unemployment's probably going to start to level off. I don't think it's going to go to 13, 15%. In fact, yesterday there was a key weekly jobless claims, and it's nearly under 500,000. Which again, it's not a really pleasing number, but as it starts heading south, and as a lot of the unemployment data starts heading south, it's again a sign. I mean, I guess, you know, having followed that non-farm payrolls number closely over the last 6 to 7 months, we might even see a positive print somewhere around February, March. And that, I think, will, once again, people will start to say to themselves, okay, well, you know, we're truly out of this. And one thing I think a lot of analysts are just starting to twig, something I've been trying to put across for a long time, is that companies have built in enormous amount of efficiencies in the last 6 to 12 months. Lots of job cuts, and suddenly they don't have enough to pick up there was a slack, but suddenly they don't have enough in order to be able to fulfill orders. So there might be, interestingly, aggressive hiring here. But you know, US employment, you know, we're far away. We're just watching what everyone else is saying. Okay,
the dollar strengthened in yesterday's session. We know there's a lot of negative news coming through on the tech sector. But what's interesting to note is obviously gold hitting $1,153 an ounce. It's now taking a breather this morning. It's around $1,145 an ounce. It could have moved since the last time I checked that gold price. What's going on with gold and the dollar play? Because there's just so much interest in gold right now, and we know there's a lot of interest by central banks. We saw India and Mauritius buying recently. China's been buying for some time now.
And Sri Lanka, as far as I know, buying in the open market. Yeah, it's interesting because the traditional demand, the World Gold Council put out a report on third quarter demand. The traditional demand, the jewellery demand, that's actually not there. It's more...
That's down 20%.
Absolutely. And the one that's driving it is actually all the, what you could call speculative money. People who are betting against inflation, people who are buying physical, people who are buying it in funds, specifically buying futures. That's actually, ironically, been pushing the price north. So the real long-term demand, Indian housewives who buy and swap jewelry, that's not there. It's the other demand which is actually fueling the price.
We're looking at platinum, because the jewelry demand for platinum is up 80%, and it's by the Chinese consumer. And Johnson Matthey released a report in saying that we could see platinum prices hit $1,550 an ounce in the next 6 months. We know that there's going to be a surplus of platinum this year of 140,000 ounces. Also, just looking at the fact that the auto catalyst sector is under significant pressure, where do you see platinum prices going from here?
And there's going to be a deficit next year. That was well scripted in their report. But then again, they make auto cats, so obviously they see motor vehicle demand coming back quite strongly next year, and it will, as things, I guess, normalize, because people would have put off those types of big ticket purchases just to make sure they have their job all the way through this year. So the news we get anxious about is mostly news flow out of the developed world, whereas if we cast our mind to the developing world, specifically China, they're actually going to sell more units this year than the US are going to sell. So I think if you're of the mind that there are going to be more people driving motor vehicles and emissions controls globally, there's a concerted effort. Copenhagen is in just a few weeks' time. There's a concerted effort from world leaders to address these types of problems. I think the future in the short term for platinum looks very healthy. And then I guess that jewelry demand segment of their sales is obviously might be a booster. But the problem lies in that during this time, because of the wild move in the platinum price, many of the producers have not been able to ramp up demand. So ramp up supply, sorry. So if there's a demand surge, we're going to be in for perhaps a little bit of a shock over price. And don't rule out Eskom again.